Hey everyone, there's been a lot of talk about PayPal stock lately. The company recently reported earnings, the stock price is falling. Of course, PayPal stock is and has been one of my top stocks to buy in 2023. So, I wanted to share with you in the key things I found that the CFO said that I think has a lot of people talking about PayPal stock. So let's get into these details. So relative to the first quarter targets we shared with you in February, both our revenue and earnings per share outperformed. Excellent, right? Uh, they told us they're going to deliver a certain amount of revenue and earnings per share, and they beat those estimates. That's really good. In the first quarter, US revenue grew by 13%, while international revenue grew by just 3%. So significant headwinds in its international segment right now. The CFO moves on. Originations were primarily driven by the strength of our buy now, pay later franchise. As we have discussed, later this year we plan to externalize a significant portion of this portfolio, reducing our balance sheet exposure as securing a long-term partner to support sustainable and healthy growth. I really like that. I like the fact that PayPal is moving to become more of an originator and selling these buy now pay later loans and not keeping them on the balance sheet, exposing it to the risks of default, right? I like the fact that you originate these buy now pay later loans and sell them, right? Have somebody there already and to buy and sell it like instantaneously. Don't hold on to these loans because that increases the risks on your balance sheet. If let's say we enter a recession over the next few months, and that recession ends up being longer than expected and deeper than expected, there's going to be a lot of defaults in these buy now, pay later loans, and you don't want to have that on your balance sheet. You would rather just originate these and sell them and take a small fee for making that transaction. That's a much more lucrative, less risky form of generating profits and revenue from this business segment. Already, um, we're seeing normalization of our credit portfolio to pre COVID delinquency levels. Normalization to pre COVID delinquency levels. So, in other words, what they're saying here is that default rates are going up, right? Because during COVID, there was very few defaults. Consumers' balance sheet was much healthier during COVID than at any time before than during the years before COVID because governments worldwide provided stimulus to consumers in the form of stimulus checks, unemployment benefits, and other forms of stimulus that helped consumer balance sheets stay healthy. And so there wasn't very many delinquencies. In fact, delinquencies were at record low levels, not just at PayPal, but if you look across the board at lenders, car lenders, home mortgage companies, credit card companies, everywhere I looked, delinquency levels were unsustainably low due to those higher consumer balance sheets. And now, what PayPal is saying is, oh, look out, our our portfolio is seeing a lot more delinquency, a lot more default. And that's really bad news, especially for PayPal, because PayPal has what's called uncollateralized debt obligations, right? It's not like it's a mortgage company where if their borrowers default, PayPal can go and foreclose on the home, recover its money that it's lent, right? That's not the case with PayPal. If its borrowers default, they can't there isn't anything they can do. They just lose out on that money. And so that's going to impact PayPal more so than it might impact a mortgage company or a car loan company because they have collateral they can go out and get. So this is bad news for PayPal and is partly the reason why the stock price was falling after what seemed like a relatively good quarter financially. And I will discuss these final couple of points before ending this video. The company did say they're going to generate approximately $5 billion in free cash flow, and they're going to use most of that, roughly $4 billion, to repurchase their shares. I like to see that as an investor, as a shareholder, when management is buying back shares of its stock, it signals to me that management thinks their stock is undervalued, and I tend to agree. I also think PayPal stock is undervalued. And they speak about guidance, second quarter revenue growth of about 7.5 to 8%, and they expect non-GAAP earnings per share to grow about 20% to about $5 per share. That's an increase of about 2% from the previous guidance they gave in February. So there was a lot to like about what the CFO talked about what's going on with PayPal in the current quarter. There was also some concern: the rising debt, the default, the riskiness of that buy now, pay later portfolio. And, they're starting to look to sell that. We don't know if they found partners yet that are going to be willing to buy that portfolio of risk at a time when macroeconomic risk is elevated. So you can understand why so many people are talking about PayPal stock. So many investors are kicking the tires trying to see, should I buy this right now? Was that stock price fall justified, or is this a buying opportunity on the dip? And I would agree with all of the above. I would say the stock price decline is justified, right? The risks for the company certainly increased in the quarter. And I always say when risk goes up, valuation of a stock goes down, because all else equal, you would prefer lower risk. The only time as an investor that you want higher risk is if it comes with higher return. But in this case, that did not necessarily happen for PayPal. What did happen was risk increased in a way that didn't necessarily bring about a equal increase in return potential. So the decrease in stock price was, in my opinion, justified. But at the same time, I still agree that PayPal stock is undervalued and that PayPal stock is a buy right now. And I will reiterate my recommendation here that, PayPal is one of my top 17 stocks to buy right now. If you want to see that full list, I'm going to link to that video at the end of this one. But that's all for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.